The stock market is once again selling off after hitting resistance for the fourth time this year. So the question is, are we heading for another 2008? How is this going to affect cryptocurrency markets? And also, what do forex markets and the dollar look like going into next year in 2023? Well, in this video, I'm going to cover all of that and more. I'm also going to give you a key indicator that I am watching for a potential surprise rally in Bitcoin and crypto that happened very, very similarly in 2018 that is going to catch a lot of people off guard. So we did just break down through support. You can see the RSI and stochastic is definitely showing and was showing divergence and is now agreeing with the trend now, which is now moving to the downside. My personal opinion is I think we at least come close to a double bottom. And then, depending on how the sentiment is going into the end of the year and also the FOMC meetings in the future and CPI projections, that can determine whether we are heading for much lower prices or not. My overall sentiment, I do believe that we're not going to have a major 2008 collapse in the next 6 months. But I do think that one could come because of all the ripple effect from all the money that we printed, the fastest rate hikes in history, all that stuff. But I do think it's going to take a little bit longer than people actually expect. A lot of people jump to conclusions and think everything is going to happen instantly. I do think that that is actually coming around the corner. But first and foremost, I do think people are going to get surprised with the length of time that it takes for that to happen, and also a potential rally that catches a lot of people off guard. If we look at the dollar, we were talking about this really key level, actually all the way up here. It officially broke, which made the euro rally really, really hard. And when we further broke down below that, and we're starting to get the first sign of divergence. So I could totally see the dollar starting to tick upwards a bit and bringing down the euro and also bringing down stocks a bit more and potentially crypto. And then once again, dumping into the low 100s, if not into the high 90s to start 2023, which would be very bullish for assets. So there's a few things that are positive right now. First of all, the dollar is selling off and it's clearly broken that massive trend that melted all markets for pretty much the entire year this year. We've also got the Fed pivoting. So now they've decreased their rate hikes down to 50 basis points, and they are sounding pretty dovish, and they're trying to slow down the rate hikes, and we're starting to see CPI come down, at least to where expectations are. So things are actually improving on that aspect. I will say one negative thing that is not going to help markets is the fact that the Republicans did not win the midterm elections. That was going to bring a lot of certainty to financial markets because it kind of brings, policy and new regulation, new laws kind of to a gridlock where, if you have more certainty that these massive changes in laws are not going to be changed, people build conviction and certainty in markets, and you typically see nice rallies from that. But when there's uncertainty, because we don't know what laws are going to get passed and we don't know what's going to happen, people tend to not be as aggressive with investments. And that's what I think is kind of playing against the bull case in this scenario. Now, as far as Bitcoin goes, I mean, this year has not been an easy year, to say the least. If you've been in this industry, you've definitely been swimming upstream. It is not easy for the year into the bear market. But I will say, if we were to zoom out, okay, and we'll do that here in a second, actually, it brings a lot of clarity. So I'm going to do that for you. My personal opinion, short term, which nothing's financial advice and I don't have a crystal ball and I get a fair amount of things wrong. I'm not always right whatsoever. I think it's very, very high probability we at least trade back down to 16,000. I'm putting that over like an 80% probability that happens. And I think it's about a 50-50 chance that we do head lower. And my lower price target is 13K. So right, trading in the mid, 13,500. That's personally where I would want to put a lot of cash to work. If I still have, let's say I've got 15% less cash or 15% cash left in my investment, portfolio, specifically in crypto, I would be putting a significant portion of that to work, like 10 to 12% of that to keep then, maybe 3 to 5% of cash in my crypto portfolio. So that's my overall perspective. If we do head down to 13, great. If not, I'm actually okay buying a little bit higher once we have a confirmed trend reversal where we finally are starting to see Bitcoin come out of the dumps of 2022. So this is what we've seen long term. I want to show you this in 2018. So if we had a really big sell-off, right, which typical 80% drawdown in Bitcoin and crypto. It happens all the time, which, by the way, if you're down 80%, it's really, not much to worry. The thing you should be tracking is, hey, is my value in Bitcoin terms going up? As long as you have conviction in Bitcoin and crypto going up and your portfolio is growing in BTC terms, into the next cycle, you're going to be in a really, really good spot. But I really think that people have no context into investing anymore because they get sidetracked on social media. They're consistently scrolling TikTok and shorts and Instagram posts. So they're training their mind to be a very short-term thinker, and they have trouble thinking about thousands of percents return over 4 years, which kind of blows my mind. But I think it's important to have a perspective on how quickly things can turn around, which I'm about to show you, and how exponential the growth is into the next cycle. But typically we have an 80% drawdown, right? You see the RSI come all the way down very close to the 30 here, but definitely below the 50. So the RSI is confirmed below the 50. We have the stochastic all the way down below the 20, okay? And it's confirmed. The stochastic is staying below the 20, and then it pops its head out. And then we have the MACD in a downtrend that entire year. And then we have a cross. And where do we have the cross? So we've got the stochastic that pokes its head outside of the 20 and approaches the 50, okay? So that's number one. We also have the RSI approaching the 50 here as well. Okay. Then we have the MACD cross to the upside. So when all three of those things happen, we saw a 300% rally in Bitcoin. And if you don't believe me, I mean, just go do the math on the rally from the low to the high here. It's like 350% right there. Okay. So really big rallies that you see at the end of bear markets that surprised a lot of people. Now let's just go look at where we're at right now. RSI has been below the 50 since February. Stochastic has been down here for 9 months out of the year. And now it's poked its head above finally. And the MACD is starting to look like it's going to cross. So once we get the RSI closer up to like the mid 40s, stochastic above the 50, I definitely want to see that above the 50. And then the MACD actually crosses. I think that's a very, I think it lowers the probability that we don't see that rally coming and you don't get blindsided. Once we see all three of those things happen, I think the probability of a big rally increases tremendously. And that's what I'm talking about. If we don't trade down to the 13K region, I'm okay buying a little bit higher. I'm okay buying at 20. Once I have more conviction that we are going to see that pretty big rally, which could take us to the low 30s to mid 30s and potentially even the low 40s. All right. Now I want to give you just one last perspective here on really just zooming out and having a long-term approach. Because again, I think that's where a lot of people lack. They cannot think long-term. And I can tell you, if you're going to be successful in life and in business and investments, the longer term your thinking is, the more successful you're going to be. If you know anyone that's ultra successful, they think in years, in decades, in 40-year type increments when they're planning out things and looking, for certain investments and businesses they're building. So like, I really, really would suggest to start thinking a little bit longer term and zooming out like this. Like, let's get some really big clarity here. This is Bitcoin on a 1-year chart. All right. We can see the first year, it obviously started at 1 cent. So there's nowhere else for it to go but up. So after that first year, right, you see 3 years of a bull market, ridiculous growth, 1 year of a bear market, 3 years of a bull market, 1 year of a bear market, 3 years of a bull market, and now we're at the 1 year of a bear market. So after seeing this, I think it'll bring a lot of clarity to like how cycles have played out. Yes, the fundamentals are different this time. They're always going to be different. There's never one point in time where you're at a new day in a year where it's like, oh yeah, this day is the exact same day as the previous day. Like, there's always new data. But the best thing to do is to educate yourself and understand how kind of everything fits in and ask yourself, hey, what time frame am I actually investing in? Do I have conviction in what I'm investing in? And if the answer is, hey, I've got a long-term conviction and I 100% believe that crypto and Bitcoin is going to be at a higher price in the next 4 years, then maybe it is wise to think about increasing your exposure down here and not selling the bottom and buying the tops like most retail investors do. All right. Anyways, hope you got value from this video. Let me know what your opinion is of Bitcoin heading into 2023. Would love to hear your thoughts in the comment section below. Thanks so much for watching, and I'll see you here on this next video.